Hi, my name is Angus Ho with Daddy Dad, a part of the Ash Management Group. I want to show how you can budget as a full-time engineer, make real estate investments, and live an exceptional family life as a dad. So, come along with me in this journey of wealth. If you haven't known by now, I talk a lot about the ASH method. The ASH method is something I use to help others remember a simple way to create wealth. Sometimes in the thick of things or in times of stress, it's easy to forget why we're saving so hard to achieve wealth in the first place. Well, according to Credit Suisse, global wealth, 64% of the global population owns 2% of the world total wealth. 1% of the world owns 45% of the total global wealth. Right now, I would say I'm in this part of the pyramid. The best way I found to climbing this pyramid is using the ASH method. In today's video, I want to focus on the S part of the ASH method, which stands for save. Saving is about investing your money so that it can grow. By not investing your money, inflation naturally will reduce the value of your money. Inflation is like those dislike trolls eating away at your money. So make sure you smash that like button right away. Smashing the like button will attack those dislike trolls just like how investing will attack inflation. How I see investing is that you work hard to earn the money you have. Then you need to put the money you earn to work by investing it. That's why the ASH method is so important, and by not utilizing it to its fullest, creating wealth will be a little bit more difficult. For many people, the word investing conjures up images of men in suits monitoring the exchange of millions of dollars on a stock ticker. I'm here to tell you, you don't need to be the Wolf of Wall Street to start investing. It's okay if you're more of a mouse of Main Street. Even if you only have a few dollars to spare, your money will grow with compound interest. The key to building wealth is developing good habits, like regularly putting money away every month. Swap out the barista-made cappuccinos for coffee at home, and you could already be saving more than $50 a month. Once you have a little money to play with, you can start to invest. With so many different options, investing for beginners is simpler and more straightforward than ever before. Soon, you'll see how addictive growing your money can be. Here are 6 simple ways to get there. Number 1, try the cookie jar approach. Saving money can be tough with credit cards and debit cards nowadays. If you're still that person that uses cash or enjoy going to the bank to get the cash out, then cash jars or money envelopes would be a great approach to doing these things. If you are online, there are so many tools now like Mint and EveryDollar, which are my favorite tools to budget. Start with a small amount of money and then increase as you get more comfortable with the process. It may be a matter of deciding not to go to McDonald's or passing on the movies and putting that money into the savings account instead. Some of my favorite savings account is EQ Bank offering 1.5% interest. The best rate I found for the USA is VO Bank offering 0.57% interest. I just want to let you know, based on my experience with EQ, they have been everything you need to save money. They can internally link your EQ Bank account with many of the major banks to transfer your money quickly. They also provide you with online chat and phone support, which can be helpful when answering questions. In terms of my overall experience to get that 1.5% interest rate, it's a pretty good bank. Moving on, number 2, let a robo-advisor invest your money for you. Robo-advisors entered the investing scene about a decade ago and make investing as simple and accessible as possible. You don't need any prior investing experience, as robo-advisors take all of the guesswork out of investing. Robo-advisors work by asking a few simple questions to determine your goal and risk tolerance, and then investing your money in a highly diversified, low-cost portfolio of stocks and bonds. Robo-advisors then use algorithms to continually rebalance your portfolio and optimize it for taxes. There's no easier way to get started in long-term investing. Most robo-advisors require just $500 or less to start investing and charge very modest fees based on the size of your account. They all offer automated investing plans to help you grow your balance. If there's any downside to robo-advisors, it's cost. Robo-advisors charge an annual fee equal to a small percentage of your balance. The industry average is about 0.25%. So if you invest $10,000, you'll pay $25 a year. That's not that much money, but it begins to add up if you amass hundreds of thousands of dollars. It's important to note that robo-advisor fees are on top of the fees charged by the exchange-traded funds that robo-advisors buy to make up your portfolio. You can avoid paying the robo-advisor fees by building your own portfolio or ETFs or even mutual funds. For the vast majority of investors, however, that's a lot of additional work and responsibility. The bottom line? Well, robo-advisors are cheap and well worth it. In Canada, the best robo-advisor is with Wealthsimple. They were the first to introduce robo-advisors, and they have a really easy to use platform to get you started. If you start an invest account with Wealthsimple, all you have to do is answer a few questions for your personalized portfolio. Robo-advisors start getting to work for you right away. In the US, M1 Finance will be the best place to get you started if you're interested in robo-advisor shares. Number 3, start investing in the stock market with little money. When it comes to investing in the stock market, cost is often the barrier to entry. It takes money to make money, right? Not anymore. The internet has made it easy for consumers to get started with very little upfront money. That means you can put a few dollars in to familiarize yourself with investing before making a bigger commitment. It's a great way to learn about investing while putting very little money at risk. Today, there are increasing numbers of options that have swung open doors to a new generation of investors, letting you get started with as little as $1 and charges no trade commissions. In the past, stockbrokers charged commissions of several dollars every time you bought or sold stock. That made it cost prohibitive to invest in even a single stock with less than hundreds or thousands of dollars. In fact, $0 commissions across companies have been so successful, they've disrupted the entire investing industry and forced all the major brokers like E-Trade to Fidelity to follow suit and drop trading commissions. Plus, the ability to invest in companies with fractional shares is a complete game changer with investing. With fractional shares, it means you can diversify your portfolio even more while saving money. Instead of investing in a full share, you can buy a fraction of a share. If you want to invest in a high-priced stock, like Apple for instance, you can do so for a few dollars instead of shelling out the price for one full share, which, as I make this video, is around $370. If you're interested in investing in the stock market, Questrade is the best app to invest in the stock market for Canada. Questrade offers 1 cent per share fees with a minimum of $4.95 and a maximum of $9.95. If you are in the US, Robinhood would be the app I recommend. The best thing about Robinhood is that they offer fractional shares. The fourth way is to dip your toes in the real estate market. Believe it or not, you no longer need a lot of money or even good credit to invest in real estate. A new category of investment known familiarly as real estate crowdfunding makes it possible to own fractional shares of large commercial properties without the headache of being a landlord. Crowdfunded real estate investment require larger minimum investments than robo-advisors. There are also riskier investments because you'll be putting that entire $5,000 into one property rather than a diversified portfolio of hundreds of individual investments. The upside is owning a piece of real physical asset that's not necessarily correlated with the stock market. I think real estate crowdfunding can be an intriguing way to learn about commercial real estate investing and also diversify your assets. I wouldn't lay all of my money on these platforms, but they do make an intriguing alternative investment, especially in these times of unprecedented market volatility and pitiful bond yields. If you are interested in putting your money in real estate crowdfunding, Fundrise is a great platform to put your money in these real estate projects. If crowdfunding isn't your thing, there is another way to invest in real estate, and that is real estate investment trusts, known as REITs. I won't go into it with too much detail other than it's an option. Number 5, enroll in your employer's retirement plan. If you're on a tight budget, even the simple step of enrolling in your RRSP, 401k, or other employer retirement plan may seem beyond your reach. But you can begin investing in an employer-sponsored retirement plan with amounts so small you won't even notice them. This is one step that everybody should take. For example, plan to invest just 1% of your salary into the employer plan. You probably won't even miss a contribution that small. But what makes it even easier is that the tax deduction that you'll get for doing so will make the contribution even smaller. Once you commit to a 1% contribution, you can increase it gradually each year. For example, in year 2, you can increase your contribution to 2% of your pay. In year 3, you can increase your contribution to 3% of your pay, and so on. Just know that some employers will even match up to 4% of your salary to the retirement plan, which is a great way to make free money. Number 6, put your money in mutual funds. Mutual funds are investment securities that allow you to invest in a portfolio of stocks and bonds with a single transaction, making them perfect for new investors. A mutual fund is a type of financial vehicle made up of a pool of money collected from many investors to invest in securities like stocks, bonds, money market instruments, and other assets. Mutual funds are operated by professional money managers who allocate the fund's assets and attempt to produce capital gains or income for the fund's investors. A mutual fund's portfolio is structured and maintained to match the investment objective stated in its prospectus. Mutual funds give small or individual investors access to professionally managed portfolios of equities, bonds, and other securities. Each shareholder therefore participates proportionally in the gains or losses of the fund. Mutual funds invest in a vast number of securities, and performance is usually tracked as a change in the total market cap of the fund, derived by the aggregating performance of the underlying investments. You can buy mutual funds with almost any bank or financial institution. I would stick with the bank you're already banking with and ask them to see if the bank you are with have mutual funds. If you are looking for suggestions right now, TD Bank is a great place to buy mutual funds with. They have a very broad selection of choices and support services for you. If I had to pick a bank in the USA, I would go with Vanguard. Well, I hope you enjoyed some of the ways that I described on how you can achieve SAVE of the ASH method. If you haven't yet, make sure you smash that like button, because smashing that like button will be one step as well to achieving world peace. I hope that these 6 steps will really motivate you to get started with SAVE. Make sure that if you have any questions about the ASH method or any of these investment tips, join the Daddy Dat Facebook group. I have also uploaded many tools and spreadsheets to help you save if you go over there. By following and taking action of the ASH method and the SAVE part, you can reach that dream goal of yours faster, whether it's to buy the $126 million mansion that Bill Gates owned, travel the world on your own private jet, be financially independent, and retire early. Whatever it is, following the ASH method will get you there. I say this because I just reached the $1 million net worth mark. I also live comfortably in my dream house. I hope if you haven't yet, you can do the same thing as well. Until next time, thanks for watching. If you like to hear more budgeting, engineering, or real estate tips, please leave a comment down below on what you want to hear. Smash that like button, subscribe button, and be sure to hit that notification bell so you'll be the first to know when I post new videos every week on Mondays and Thursdays. From the ASH Management Group, this is Daddy Dat saving you money.